Welcome, and here we're looking at the S&P 500 on a daily chart, and I just wanted to point out here what we know and what we don't know. And from this wave 4 here, we can count 5 waves in terms of the 1, the 2, and then 5 waves here for wave 3, and then wave 4 here, and then wave 5 here. The extension in Elliott terms is in wave 3 here. That means that normally wave 1 here and wave 5 would be roughly the same size and time and so forth. And that's pretty much the case here with that sort of just splitting hairs somewhat here. So they're pretty close in the same size. So it's possible that we have the orange wave 5 here, minor wave 5 in place here. Now, if that's not the case, then we're looking for an extension to the upside in terms that we have wave 1 to here, wave 2 across here, and we're looking for a little push up like this through here, and that's what we'll be sort of looking at next. So with that in mind here, as I mentioned, we've got the alternative wave 5 that can be in place, and we would be moving down. The other more bullish case that we've got is wave 1 to here, wave 2 to here in terms of an A and a B and a C. It counts reasonably well like this here. This here, last week we were tracking 5 waves up through here. And I feel that, even at minimum, we would be looking at, from this high here, we'd be looking at some type of ABC correction, which can be to here at the 72, or we can pull back down here a little bit further before we push up through here. So it's a little bit of a tricky juncture. We could have that a top in play, or we would be looking at this as up for wave 1 and ABC, back for 2, and then up for 3, and moving up above the 1900 here. So just drilling into that a little bit more here, the 5 waves that we were tracking last week just kept pushing up here a little bit further and further, but as you can see, they're kind of fallen into play now, into place, and we're looking at the A, the B, and the C. Now, looking at the cash market, this is only a 2-hour chart here, but looking at the intraday on a cash market, it does appear that we could actually have the ABC wrapped up in here, but I think that it's a little bit small in compared to the size of this. So the ratio and proportion does not kind of match the 50-60% retracement levels down at 1855 sort of area. It may not come that far down, but I think we need to just give it a little bit of space to unfold. If it finds support on 1880 here, nice tested, makes it high above it and then comes back down and tests it and finds support and then starts to move off, then you would know that it's going to move straight off from there. But I think the logical step is for it to have this little correction from here. And also to the Dow Jones is met up with the 16,500 for the second time, so it will probably eventually chip through there, and we'll see that in a minute. But that's a strong resistance there for that as well. So yes, look, just drilling into this a little bit here again onto the 15-minute chart. Now, in this particular case, it does appear that I suppose we could split that into 5 waves here as well. But as you can see here that, look, the bottom line is support on the 1880, and we're going up. And if it fails there, then we're going to go down through here, back down to the 1855 sort of area. Just sort of splitting hairs here a little bit on the sort of 2-minute chart here. I suppose you could count a 5-wave structure down through here, this being a 1 and 2 in here, and a 3 and a 4 in here, but it's just still not sort of clear enough, so we'll just have to wait to see how it treats this. This little move up here is a very clean 5 little waves here, so that does give it some credence to the upside. But once again, we just need that support there. When we look at the Dow Jones, it's the same as well, but I just wanted to point out here that we're facing an old high here on the daily, and the 16,500 is a medium level, and it does carry a lot of weight. Expect some type of sort of reaction there. The just drilling in here just quite closely through here. The reaction from here would be of interest, and in this particular case here, if I can just go in further here, look, it's not a very good looking structure, but from the 16,500 here, the it could count down as 1, 2, 3, 4, and 5 here, then an A and a B and a C wave coming just into here, finishing into here, and then rolling down from this side here. So we just need to be mindful and careful of that. It counts better as a 5-wave structure here than it does on the S&P, but just trying to sort of look around to see what the general sort of consensus is there. Look, in this case, you wouldn't go long until you had that 16,500 as support, and if this low here was breached here, this particular low here, then you know that you're going to get another 5 waves down through here, as such, down through here, pretty much the same length as this one here would be to the downside. The DAX and the FTSE have been sold off overnight quite a lot, like one good 1%. The DAX may be more. The wave count that we've got here is just a little bit different. I think that once again, from this particular low here, we're looking for the 1, the 2, and you can see that it counts quite nicely here, the 1, 2, 3, 4, and 5 here for the third wave. So the fourth wave is normally a bit more sort of complicated. Now, this move down through here counts as 3 waves, so it can count as the fourth wave completed here, and then it would push up through here. And this can work out as 5 waves up here, so it can work out that we get the wave 1 here, an A and a B and a C here for wave 2, and then a move up for wave 3, 4, and 5. Now that's a possible. The other scenario that we just got to be mindful of is that wave 4s get complicated, so we could be looking at an A wave there, a B wave here, and a C wave, coming back down into this sort of area here before it moves further to the upside there. So that's what we need to be mindful of. And if we just look in this in a little bit more detail here, sorry about all the numbers all over the place. This move down through here is above this move here because we were looking at counting this as 5 waves up, and it does count very nicely as 5 waves. And this move down through here, we're looking for 61.8 retracement level, and that's fine in there. But the cash market has actually made a low just below this here, so that would sort of make me think that this has actually got some sort of little bounce here as a wave 4 and 5 here. So basically an A and a B and a C wave coming down here a little bit further through here before we see a push off through here. If the 9.2 became the resistance here, then you would see it further down from that point there, and then we'd be looking at a larger ABC. So we'd be putting the A wave here, the B wave up here, and the C wave down here for wave 4 here, and looking for it to test back into the the 9,000 sort of area through here. So in this case here, we wouldn't go long until we're on to 9.5 here. So that's not very clear there either. So you just have to wait for 9.5 here. If it does pull down here in 5 waves, which would be the 1, 2, 3, 4, 5 in this leg here, we'd want to see it move down and then develop support on the 9.3 here, and then we could start working it from the upside. If the S&P 500 was going to push from the upside, from the 1855 or the 1872 sort of area there. So we just need to wait it out a little bit, and the same with the FTSE as well. The FTSE's in the same situation as well. It's it's interesting really, because with the FTSE we've got this move down here, which is quite a clear bullish corrective pattern here, and we were looking for wave 2, and then the move up through here can be counted as 5 waves, but I know that it could also be counted as 3 waves as corrective as well. It's just a little bit iffy, so we need to be careful The move currently down here is also so far in 3 waves, so it's corrective as well. So look, as long as it stays above, you know, roughly, as long as the 60s, it may spike down here to finish something, but as long as it doesn't find that 67 as resistance, then it's got a good chance to move to the upside. But it would have to find, the safest trade would be to, or the safer trade would be to have support on the 6-8 here, and then trading up to 7,000 at that point here, because we'd be taking that high out if that's the case. So, you know, finding support on that current resistance would be the safer trade. A breach of the 6,700 here, and of course, well, not a breach, but a retested resistance there, then would be seeing a larger correction to the downside. So we'd be looking at something like this moving to here, with the C wave here, this being the A wave here, and the B wave here. You know, the corrections are the weakest link in Elliott, and you know, there's some strong points in them as well, but this is what could occur here as such. And the Australian market as well. We were tracking this little 5-wave structure up last week, and it's there, it's completed, so it's just natural to expect a correction. It would have been nice if we made a high above this previous high here, because we've been tracking this whole 5-wave sequence up here. So it does kind of leave me to sort of leave on the table that, you know, if this had moved up through here just a bit, then I know would be going higher. I could confirm that, but because it's lower, I can't confirm that as such here, because there can be some other wave counts here as well. A little bit sort of tricky, but the B wave could go to here, and the C wave could go down to here, because it never made that high. So this would be an A wave to here, then A and a B and a C wave here in 5 waves, and then moving down through here. So it's a little bit tricky. It's a little bit tricky on all the markets actually. So we just have to wait it out a little bit and see what comes. Now, in terms of trading this here, if we were looking at this as a 5-wave structure up, then it's only natural to look at this as an A and a B and a C correction to here, and then moving up from here. This is the 50-60% retracement level. So I guess if you know, first of all, the 54.50 here is a bit of a nice line in the sand. So, you know, if the market found that as the resistance, then you'd be looking down to here. I know there's also support here as well at the 54.30 sort of area here. So that's something that you could look forward to as well. But if the 54 became the resistance, then you know that we're in a bigger bearish picture, and all the other indices will be in their legs moving down a bit further as well. But they all can just push up from exactly where they are. The DAX is a bit of a concern, but the rest of them, their wave structure is quite positive and can move up. I do think this is a little bit small here as a correction to rebalance this move out through here. So we would expect a larger correction here. Normally the Friday session, if that was higher, and it was higher, but it wasn't higher on higher volume. When we look at Friday's cash daily volume, the market was higher, but the volume was lower. And the same with the day before. The market was, well, up. It didn't make new highs, but it was up, but it was also in lower volume as well. In fact, all last week here, all of this here on a weekly bar, it was up, but it was on lower volume. So that's sort of a divergence thing as well, especially when you're sort of looking at the top of the market, when you're looking at a trend that's been sort of completing for a while. And, you know, and what I mean by that is, you know, all of this here as such. But look, as this stands, I don't want to be too pessimistic, but as this stands, we do have an ABC correction to here. We do have 5 waves up here. So we would be looking for a little counter trend here and then a move up from there. The FTSE has been sold off quite strongly, and the DAX, and that, you know, we do have a relationship with those markets. If the S&P 500 breaks the 1872, then you know that that's weak as well. So keep an eye on that. There was some CPI figures that came out of China on Sunday. They were a bit lower than expected, so but not much. So it's not shouldn't sort of weigh on it too much. We know that the the base metals are weak. Well, copper's weak. The nickel is actually quite trending up from the bottom, so it's quite strong. If we have a look at CBA, what's this here? We'll just have a look at this while we're here as well, because we've looked at this from time to time. This is the DJ UBS commodity index, which is it's a daily chart, and the DJ commodity index is a basket of all commodities. No singular commodities got a weight over 15% from memory, but it includes Brent and natural gas and, you know, corn and the whole basket of them. But one of the interesting things here that we've been noting here for quite some time is that, if I can just bring this in perspective here a little bit, I won't go into all the wave count here as such, but what I can say is that this move down here was in 5 waves, and then we had our counter trend, and then this move here is in 5 waves, and we counted all these little waves in here. So we called a low in through here, and then we noticed it was confirmed that we had 5 waves in this little structure to the upside here. Little bit hard to see as such, but you know, you can get your mind around it. The 1, 2, 3, 4, 5 here. So having 5 waves there confirms that after a correction, and it was a rather sharp one, that we'll get another 5 here. And what we're actually seeing here is we're not only seeing another 5 waves, we're actually seeing a third wave here. We're seeing, you know, this is like sort of wave 1 into here and wave 2 to here, and this would be like wave 3 up here. Wave 4 hasn't begun yet, but it looks like it will, and when it does, it will pull back to the wave 4 of 1 lesser degree, which would be here, because from here we can get 1, 2, 3, 4, and 5 here, so it would pull back through here. So we can expect a little, you know, general sort of correction back in here, and then we'll see another 5 waves up here to complete wave 3. But in the bigger picture, we would see this here. If I can put that there, bring that into here, this is still climbing to the upside. That's my main point anyway. So, you know, and the other interesting thing here is that in Elliott terms, like I mentioned here, if we got little 5 waves here, then we'll get 5 waves over here. And because it looks like we're going to get this larger 5 waves here, this 1, 2, 3, 4, 5, that means that we're going to get another 5 after that too. So we could put this back down here as an ABC correction here, and then we can look at this as getting another 5 waves here of the same length of this one here, if not longer. So it's a very good thing for the commodity market. So in general, and that's why we're trading. Some of our best trades have been in wheat and corn and soybeans and now orange juice. So if you're looking for a trend, that's the place to look. But that said, I just wanted to go back and have a look at CBA. First of all, I'm just going to go into the bigger picture, because we're a little bit confused about the indices as such. You know, we've got to have a look at what stock is doing, because obviously stock, you know, creates the indices, you know. So this is CBA here, and you know, across the trading level 5 here, beautiful long-term setup here. And the main thing that we wanted to look at here, just to point out, is just simple, is just this really. This is wave 1, this is wave 2, and this is wave 3 here, okay? Now, this is all sort of debatable about, you know, what structure, you know, this internal structure is, but just want to point out that we're heading up to 100 and there's more to go. So that means that, you know, if the commodities in general are going up and this market here is going up, and then, you know, we should be going up further, and we need to be longer term long. Now, just drilling in here a little bit, I'm not really going to dive into this third wave here. I don't have the time for that at the moment, but what I will do is we're just looking at this particular structure here, because this is what we were looking at. Well, we've been looking at this on and off over the last wee while anyway. But the main point here that we wanted to make was that this move down here is in 3 waves. So that's corrective here. Okay, and then we'll push up. Then what we were looking for is we were looking for this move up here being in 5 waves, and then having a correction in 3 waves here. Okay, so this would be like up for wave 1, a little A, B, C for wave 2 here, and now a little third wave going up. So this would be this little third wave here, and within that we'll see it should move quite quickly and swiftly. So we should see 5 waves in here moving up quite swiftly as well. So we've obviously treat this as the daily robo system 1 market, which I only do that one for Australia, simply because you can go off and find other markets to do it with as well. But it's just there to remind you that it is a strategy and it does work well. But we're also trading this long here as well for a longer term trade here now. So it could present quite a nice sort of opportunity here as such. So technically you just need to keep the stop under here. Yes, you could put it higher, but if this moved up with a little 5 waves in here, then it's going to come back a little A, B, C in here before it moves up. All right, that's enough of that. But yes, so I forgot where we're up to here with the Australian one here, but logically everything looks positive here. It could push up from here, but as I mentioned, it's just a little bit small to rebalance this correction here, this move here in terms of time and price. So I would expect something a little bit larger from here. Let's see how we go. The 54.50, while the market's under that, you cannot go long. And if it does move down, look for 5 waves and look for this low here, or possibly into the 50-60% retracement level area here. If I'm totally wrong and the 54 becomes the resistance, then we need to look at this being more serious top in play here at this point. But yeah, no, we should see that. We should see it. We should see some buyers come in here. Anyway, we'll see how we go. Alrighty, cheers.